Hey guys, what's going on today? So in today's video, I have two really high growth stocks that are both trading under $10. I think both of these stocks right now are extremely undervalued and could easily double at any moment. So they represent a really good buying opportunity. So I'm very excited to show you guys these companies. There are two companies that you probably have never heard of. So these aren't your traditional companies you're seeing all over YouTube. I've only seen one other YouTube cover one of these companies, and that's where I got the idea from. And so yeah, make sure you guys stay tuned till the end of the video. I think you're gonna like both of these companies I have for you today. Okay guys, so before we dive into this video, make sure to check out the links down below in the description. I have a link to Webull, where if you sign up to Webull using that link and deposit $100, you'll get 4 free stocks. And this is only available in the United States. And then for the Canadians out there, I also have a link to Questrade. That's an online brokerage, and you'll get your first $50 free in commissions. So that's also a pretty good deal as well. And of course, if you guys could drop a big thumbs up on this video, it really helps out with the YouTube algorithm and to grow this channel. And if you're not already subscribed, well, make sure you sub. I cover stocks almost every day of the week, and I really do try to find the best opportunities in the market for you guys. I spend like all day researching this stuff. And so yeah, with all that being said, let's dive straight into this. So the first stock I have for you is really exciting. I actually got this stock from Meet Kevin. He's a really popular YouTuber where most of you guys probably know him. He's nearing 1 million subscribers now, so good for him. But the stock he talked about is Shift Technologies. So Shift is in the used car sales business. And this is a really thriving, high growth industry right now. Used car sales are through the roof this year. However, Shift hasn't yet seen a massive increase in its share price. And there's really only 2 other competitors it has. So you can see here, this is Shift's chart. It's trading around $9 to $10 right now, and it has a market cap of about 756 million. And its ticker symbol is SFT for those of you who are interested in looking this company up. But moving on to its competition, so like I said, there's only 2 other competitors. The smaller of the 2 competitors is Vroom. That company has a market cap of 4.8 billion, so that's about 6 times bigger than Shift. So fairly bigger, but even this company is significantly smaller than the next company I'm going to mention. But Vroom hasn't performed very well this year at all. You can see over the last 6 months, its share price was trading around $50 in beginning of July, where now it's at $37. So it really hasn't done anything at all, which is kind of unusual for such a strong industry. But this is because Vroom doesn't have very good customer ratings, and I just don't think it's an overall great experience for a lot of people who are looking for a used car. So where most of the gains have gone is actually to Carvana. Carvana is the biggest company in this industry. It has a market cap of 42 billion. So this is pretty massive when you're comparing this to something like Shift. Shift with a 750 million market cap, that is a big difference, and so Shift has a huge amount of room to grow. Right now, it's really just Carvana dominating this industry. And you can see they've done very well this past 6 months. They were trading around $93. Now they're at $249. That's around a 3x return in just 6 months. So they are doing very good through this pandemic. And Carvana has pretty good ratings amongst customers, but actually Shift, I believe, has a little bit better customer reviews. It's really similar though, but the worst out of the 3 is Vroom. So the reason why I'm showing you guys Shift is because they're in a booming industry that I think is gonna perform extremely well over the next couple years. Right now, we're in a pretty big recession, and I really don't see the economic impact going away anytime soon. So as long as people are conscious of their finances and looking for a new car, there's gonna be more people looking at the used car section than new cars. So that's one macroeconomic environment that I like with Shift. And then another thing is that I just think that it's undervalued, and at any moment now, I could see this stock doubling. But on the flip side, like what Meet Kevin has said in his video, this stock could lose half of its value as well. But I'm definitely more leaning towards it doubling, tripling, 5xing in the future. On a probability basis, it's more likely to increase than decrease. And yeah, right now it is still a really small company in a big growing industry. You can see here that this market analyst can see Shift gaining to $15 a share, and that would be an almost doubling in price. So that is quite interesting. You can see that analysts are looking pretty bullish on this company. And if we look at what they're saying about revenue growth, they're expecting around 100% revenue growth in the next year of 2021. And that would be pretty huge considering this year they brought in around 200 million, where if they bring in 405 million next year, I can't really imagine them only having around a 700 million market cap. It would be grossly undervalued if it still continued to trade at a 700 market cap when bringing in 405 million a year. So we can definitely see this stock increasing in share price massively if they can hit these kind of numbers. And another very bullish indication on this stock is its call options. Now I know a lot of people aren't into options, so I'll just quickly cover it for you guys. You can see here around the strike price of 15 and 17.50. There's a lot of volume trading here with 1,030 volume and 538. So this indicates to me that a lot of people are very bullish on Shift right now, because you got to look here. This is call options for December 18th. This is only about 3 weeks away right now. So if Shift can get to 17.50 in the next 3 weeks, that is almost a 2x return, and a lot of people are betting on this happening. So that's just another bullish indication for this stock. So that's my quick overview for Shift. Make sure you guys comment down below if you have any questions about the company, and let me know what you think about the company personally. But carrying on, I want to move on to the next company. This one is something that I'm personally invested in. I have about $3,500 invested in it, and I was up about 70% on it. Now that's only about 25% I think I'm up. It's a very volatile stock. It's very small. This is a penny stock. And the company is CBDMD, ticker symbol YCBD. So this is obviously in the CBD industry, and it's based out of the US. Its market cap is only 139 million, so very small company, but it's a very compelling valuation. You can see that their PE ratio is only 2.49, which is just insanely low. But I'm gonna explain to you guys why it's likely that low, and I'll go through some of the risks with the stock. Okay, so what CBDM is, they mainly sell CBD products online, but they're also in thousands of retail stores. So they sell both online and retail, but their online presence is very dominant. So that is one of the strong points with this company. And they sell everything CBD. You can see here they have gummies, capsules, sleep aid, CBD for pets, and this is a really promising product. It has seen very good growth this past year, and this is just a huge growing market for pets. So really nice to see. And then they also have like bath bombs. They got everything. So they sell all things CBD. And one of the big things with this company, they're all about quality. So I personally actually seen this third-party testing done, and the test results were like 99% pure. So it is very pure CBD, where a lot of companies out there kind of fake their CBD. It's not very pure. Where this company, they are about quality, and it has been kind of proven through all the testing. So people can be assured with that, and I think that's just something that'll keep customers retained. They don't want to risk getting some kind of fake product. So that's a nice thing to see about this company. And also going back to the CBD for pets. So the brand is called Paw CBD, and this one's been doing really well. You can see here that their quarterly net sales expected to increase between 30 and 34%. And it's been seeing really good growth in this product over the past year. So this current year, their sales growth grew by about 75%. However, next year, they're only expecting 22%. So this could be partly why it's trading at a low valuation. However, next year, they also are probably going to be profitable. Plus, this 22% is likely going to be beaten by a lot. I do not see them only growing by 22%. I see a lot higher than that. But even if they did grow by 22%, a 2P ratio is still not justified. Like, This company is very undervalued right now. I think it's just going under the radar and not many people know about it currently. But this represents a great buying opportunity for investors like us. If we take a look what Simply Wall Street is saying with it, they are saying that it's currently trading 83% under its estimated fair value. And Simply Wall Street just uses a discount cash flow model to value companies. And yeah, in my opinion, this stock should be trading closer to $6 a share. So I could easily see a 3x return over this next year. However, that comes with risk. The risk with this company is that it doesn't really have a moat. Anybody can create a company and sell CBD online. So I think this is probably scaring some people away from it. So just something you need to understand is that there isn't really a barrier to enter this market. Obviously, you need a lot of capital and you need to know what you're doing, but it's relatively not that hard. The only moat I could really say, which isn't really a moat, is that it's one of the first movers. So it has that first mover advantage. They already built relationships with different MMA fighters. So they sponsor different fighters and promote their brands using that method. And that's been pretty successful for the company so far. But yeah, not much of a moat. However, the company is growing. It's really undervalued. So I can definitely see a good play here with this company. And if we just look at his balance sheet, I'll show you a little bit more about how it's not really that risky. We can see here it has about 15 million of cash on hand, and it only has 9 million of debt. So it could easily pay off all its debt and still have about 6 million left over. And another beautiful thing with this company is because it's mostly based online and just sells CBD to different retail stores as well, is that it has a very high gross margin on the products it sells. It's around 70 to 80%. So they do really well with that. But the company does spend a lot of money on advertising. That's a good thing though in my books. They need to try to grow it as fast as they can, so they don't just get kicked out of this industry. But yeah, that's just a quick overview of this company. I think it's extremely undervalued and could represent a really good opportunity over this next 1 to 3 years. I'm currently invested in them myself, so I do believe in them. However, this company isn't without any risk. If they're not successful, you'll see this company probably disappear. But that's like most penny stocks though. They're penny stocks for a reason. They carry risk. But yeah, anyways, guys, those are the two companies I wanted to show you today. Make sure to comment down below. Let me know what you think of them. And let me know what one is your favorite out of the two companies. I definitely like both of them, but I gotta say Shift is representing a really good opportunity because it's becoming more well-known and I like the industry it's in. But yeah, so if I had to pick my favorite out of both of these companies, I'd probably say Shift at the current moment. But yeah, anyways, that's all I have for today's video. So thanks for watching till then, guys. I really appreciate that, and I'll see you on the next one.